Alright guys, welcome back. So I hope whatever we have discussed regarding the revenue computation is absolutely clear and we are comfortable with computing the revenue when we are given some assumptions to it. In today's video, we will be moving forward with the computations and we'll start with the cost computations. So let's have a look at a case study and see what are we given in terms of cost assumptions. So let's first look at the operating costs. So in 2017, we are given that 80% of the cost of sales were classified as variable costs and the remainder as fixed. Now, what does that mean? Now, whatever you would be seeing in the financial statements regarding 2017 cost of sales, so let's just have a look. Cost of sales for 2017, if you can see $1801 million. Now, the case study is saying that this $1801 million, out of this, 80% of cost of sales are variable costs and the remainder is the fixed. That means 80% variable and 20% fixed. Now, how would that make a difference in our computations? Now, you must be wondering, so what? Why is this bifurcation given to us and what do I need about this bifurcation? Now I'll tell you what. Now we have studied somewhere in our academic days that variable costs vary with the output, right? So as soon as I say this, something might click that okay, we were given that additional square feet, we were given additional number of stores in the case study. That means if 80% is the variable cost, then that means that cost, that variable cost would be fluctuating with the additional square feet of the area or the additional stores, right? Now you get it. That is why it is very, very important for us to bifurcate the cost of sales between the variable cost and the fixed costs. So keep that thing in mind. We'll do this. Cost inflation is expected to be 2% per year for the next 5 years. Okay. Selling general and administrative expenses are expected to be $480 million in 2018 and grow at inflation thereafter. All right. So let's put these things in our input sheet. So this will be my cost assumptions. Okay. Now first we are given that variable cost is how much? Variable cost is 70%. So variable cost is 70%. That means what is my fixed cost? 1 minus 70%, right? 1 minus 70%. So 30% will become my fixed cost. Okay, was it 70%? Was it 80%? My bad. It was 80%, right? So let's make it 80% here. So 80%. Okay. Now, cost inflation. Now let's make the cost inflation in our scenarios. That means if there is a favorable scenario, if it's a best case scenario, my cost inflation would be a little less, right? If it's a worst case scenario, the cost inflation might increase. So let's do it as a model scenario. Just copy the block here and bring it down. This will become my cost inflation. Now base case, you are given a cost inflation of 2%. So let's make it 2% throughout. Best case, let it be 1%. And worst case, let's make it 3%. You are free to make your own assumptions here. Now, as and when you'll select the switch here, so best case, it will be 1%. It will get linked automatically. This is what we have been doing it. All right, so this is our cost inflation. Now let's bring this cost inflation to the input sheet. Fair enough. There you go. So just check the links once. Whenever you copy something, be sure to check the links. And then one more thing was given to us, SG&A, selling general and administrative expenses, as a $1 million figure. And this was given as $480 million. So SG&A in 2018 was what? $480 million. Alright, so these are my cost assumptions that I need to work with as of now. Now you know the drill. Copy the template sheet, guys. Copy the template sheet and rename it as cost computations or cost C. Change the name of the worksheet, cost computations, and the first one that I am doing will be my cost of sales. Cost of sales. Reach till this point, guys. I'm giving you some seconds. Okay. So while computing the cost of sales, let's go in a very step-by-step approach here. So the first is computation of variable cost for 2017. Now we know that 80% is my variable cost, right? So but what accounts for that 80? What is the figure for that 80% to be the variable cost? Let's see. So let me bring in the cost of sales. Let me connect the cost of sales, right? Put a minus sign. Put a minus sign. Okay, how do we actually link it here is you press equals here, press a minus sign and then link it to the cost of sales. Now why did I do it? Because if I would not have entered this minus sign, let's see what would have I got. So equals, if you just link it to this, it will become your negative number. Why? Because in financial statements, it is a negative figure for the expenses, right? But I don't need negative figures here because I have to do my computations. So before linking, I just place a minus sign. So that becomes my positive number. Fair enough. Just link the variable cost. And this is, don't forget to write the units. That is very important in your financial model. Fair enough. This gives you the number for variable cost for 2017. So total cost of sales multiplied by 80%. And 1441.5 is my variable cost in your millions. Now, this is my variable cost for 2017. I have number of stores with me, or I have number of square feet of area with me. Now, if I have the variable cost for 2017, I have total square feet in 2017. Can I find out variable cost per square feet? Just as we did in revenue, right? Just this, it is just the same thing, but for variable cost this time, right? So let us compute variable cost per square feet. I will link the variable cost here. I have just computed above. Some of you might be wondering why have I linked it again? Because of the concept of calculation blocks, remember? Last line of the block should be my computation, and above that all the ingredients that I will be using in this formula. Right? I hope that is very clear. So variable cost for 2017, I've got it. Total area of stores in for 2017, I also have it. Where do I have it? From the input sheet. Total area of stores in 2017. If your number is not coming within that cell width, press Alt OCA to shift to adjust the width. Right, that's the shortcut we've been working with a lot now. That's it. What is the variable cost per square feet? Variable cost per square feet. This is your dollar per square feet. And how will you get this? How will you get this? Simple. What is my absolute number? It is in millions, so 10 raised to the power 6 divided by total area of stores. So it gives me 143.8. So per square feet variable cost is $143.8. Reach till this point? Okay. Now, guys, one more thing. If it might happen that you are working simultaneously with the video, and wherever it might also happen that sometimes I move very quickly and you are still doing the computation. Do not worry about that. It is a recorded video. Pause the video, complete your workings, and then resume the video again. Right? But it is very important for you to do side by side. Just go along with me. Okay. Now, I have variable cost per square feet. Now, it was, something about cost inflation was given. Now, we know that my cost increases as my inflation increases. Right? So, every year, your cost will increase by a certain portion. And that is to, to factor in the inflation rate. Okay, so let's compute the variable cost in the forecasted period. So variable cost per square feet for forecast. How will we do it? I just have computed variable cost per square feet above. Now do you observe I am going in a very step-by-step manner. First computation, then that derives another computation, then that derives another computation. And that's how you need to make your financial models, so that whoever is reading this financial model, guys, the person is able to understand what you have done. Right? The person should move in a step-by-step manner with you. Okay. So computation of variable cost per square feet in the forecasted years. So I have variable cost per square feet. I have from the input sheet my cost inflation. You have your cost inflation. Don't forget to mark it a gray here for the historical years, because we're not working in the historical years. And then just format it with a percentage. That's it. Another computation for you. Variable cost per square feet for the forecast period. This becomes your dollar per square feet. Now, you need to tell me what will be the formula. What will be the formula? We've done this formula in the previous video for revenue also. what I need is, if the year is 2017, I need 143.8, right? If the period is 2017, I need 143.8. Otherwise, what I need is whatever is the value in my previous cell, and I will increase it by the inflation rate, right? So how do we apply the formula? If, now what is my logical test? What is that I am testing? That year is 2017 or not, right? So year, if the year in this end date is equal to 2017, then give me 143.8 and column freeze it, right? Then give me 143.8. Otherwise what? Excel says, okay, if it will be 2017, I will return this value. But what if it is not 2017? Then what should I give you? And we need to tell Excel that, Mr. Excel, if it is not 2017, then check again. If it is not 2017, then check again. If the year is greater than 2017, if it is greater than 2017, then what do I need? The previous cell value multiplied by 1 plus whatever is my inflation percentage, right? Excel says fair enough. What if it is not greater than 2017? Then we say, okay, give me 0 in that case. I don't need anything in that case. Okay, so this is the formula that we also applied in the previous video, and we applied today as well, right? So we are saying, if the year is 2017, give me $143.8 per square feet. If it is greater than 2017, give me the previous value and increased by this inflation rate. If it is less than 2017, give me 0. That's what we have said. Fair enough. So you will observe, in 2017 we have the correct value. Prior to 2017 we are having 0, and after 2017 it is increasing by the inflation rate. Okay. Now, this is my variable cost per square feet as a forecast. This is my forecasted variable cost per square feet. Can I compute total variable cost somehow? How can I compute the total variable cost? Is this the total variable cost? No. This is my variable cost per square feet of the area. How should I compute the total variable cost? You might say, oh, that's very easy, Ayush. You have variable cost per square feet in the forecasted years. If I am not wrong, while computing revenue, we had the total square feet going forward. So we can simply multiply the two. Perfect. That's amazing. So let's do this. So computation of total variable cost. I have variable cost per square feet as a forecast, right? Just compute it above. I have in the revenue computation total area. In the revenue computation, I have total area as well. Now observe that you might be getting this hash in the columns, because total area is a lot in width as compared to the width of this column. So what you need to do is select all these hash values and press Alt OCA. So it will adjust all the columns together for you, right? Again, you might see me doing something else because I am operating on a Mac, and some formulas do not work on Mac. And some shortcuts do not work on Mac as it is. Okay, fair enough. That's it. Let's compute the total variable cost. In dollars million this time. And what is the computation? It's very simple. My per square feet value multiplied by total square feet divided by 10 raised to the power 6. Why? Because I need all the values in millions. Okay, reach till this point. Okay, now I hope we are together till this point. Now, what I have computed is my total variable cost. But shall I connect this number in my financial statements? Shall I take this whatever number that I have got after this computation? Shall I take it and link to the financial statements as yet? Yes or no? Some of you might be saying no, and you are absolutely correct. Why? Because what I need to take in the financial statements, understand, what I need to take in financial statements, that is the total cost of sales and not just total variable cost. Yeah, now we're talking. So I have total variable cost computed. How can I get the total cost of sales? So that's the computation. Next computation. Computation of total cost of sales. I have the total variable cost. Just compute it above. Right? I have the total variable cost and we have just computed. And I also know that my variable cost is 80%. I also know that my variable cost is 80%. Now I have two options here. I need to link the variable cost 80% here, right? So I can either go to the input sheet and link it from here, or I have already linked this above, right? So if I would have done a row freeze here, if I would have done a row freeze here, I can simply copy this row and paste it here. That saves some seconds for me, right? Okay. Cost of sales in millions. Now, I have total variable cost. My variable cost is 80%. So how can I get the cost of sales? It is just the reverse of what I did in the first place. In the first place, what we did, we had cost of sales, we had variable cost percentage. So to compute the variable cost, I multiplied my cost of sales by 80%. Now if I have to go back, now if I have to do a back calculation, I have this number, I have this percentage. How can I get to cost of sales? So I will divide by 80%. Right? So it's a simple computation. Divide this by 80% and do a column freeze. That's it. That's it. You have received cost of sales. Such an easy computation. Now this cost of sales that you have computed, that will go and get linked in the financial statement. So equals here, minus sign because I need now in the negative numbers. So don't forget to link from the accurate columns, okay? You need to be very careful here. So I am doing for 2018, so I link from 2018 only. So that gives me two computations in my financial statements, one for the revenue we have done, one for the cost of sales. Okay. Now some of you might be having another question that, okay, I have computed this by just variable cost. But what about fixed cost? Why have I not done anything about the fixed cost? Because that was not required. You could have done that, you have computed total variable cost by doing the same computations. Now, instead of 80%, take 20% and compute the fixed cost and then add them up to get to the total cost of sales. You can do that as well, but that wasn't required. Why will I increase my number of computations when I can do it in an easy manner, right? So that's for your cost of sales. Next bracket is for SG&A. Next segment is for SG&A. Now this is a very simple computation that has been provided to you. You know from the input sheet that SG&A in 2018 is this much. SG&A in 2018 is this much, 480 million. You have the cost inflations, right? So if you would have done a row freeze here when you linked the cost inflations, you can simply copy the row. Now you know why these why this computation is very essential, why this row freezing is very essential, right? So that I can simply copy this row and place it here. So I need not format it again, I need not do anything, and that's it. Compute SG&A in dollars millions. Simple computation, again the same formula. If the year in my end date is equal to, now this time, understand, this time what do I need? This time I need 2018. If the year is 2018, give me this value. If the year is 2018, give me this value. Otherwise, if the year to this date is greater than 2018, what do I need? The previous value multiplied by 1 plus inflation rate. And if it's not greater than 2018, I need a 0. So that is the same computation. That's it in this worksheet. I am not doing any other thing in this cost computation. So end of sheet here. And the SG&A numbers that we have computed, just link it to the financial statements. Alright, just link it to the financial statements. Now, if I just drag this EBITDA formula, I am getting my EBITDA numbers, right? As you can see, I am very well getting my EBITDA numbers. Okay, I hope we are together till this point. The next thing that I need in my income statement is depreciation. Do we have anything about depreciation? We surely have some assumptions. So let's look at assumptions and then let's compute depreciation. Okay. Now let's see. We are given that the company will spend $150 million on capital expenditures in 2018 and 125 million per year thereafter. All right. So in 2018, we know how much additional assets we are purchasing. We know how much capital expenditures we are doing in 2018. That is $150 million. And every year thereafter, I am incurring an incurring a capex of 125 million per year. Fair enough. We are given that this company uses a straight line method of depreciation. Okay. Existing assets have a remaining useful life of 10 years, while the new assets will be depreciated over 20 years. So, whatever assets are there in my books currently, they have a useful life of 10 years, while my new assets will be depreciated over 20 years. Okay. Then we are given that the depreciation expense is included as a separate line item on the income statement and is not included in cost of sales or SG&A. Alright, so depreciation, we need to show it as a separate line item. Intangible assets will remain flat and unamortized for the purpose of this model. So intangible assets, it is given that for this case study, we don't have to do anything regarding the intangible assets. We can just take it consistent in the forecasted years and they will not be amortized. Okay, fair enough. So let's build these assumptions in my inputs. So this is capex and depreciation. All right, capex and depreciation. Now we know the capex numbers in millions of dollars. We know for sure the capex numbers. And it is being given that the capex in 2018 will be what? $150 million, and every year thereafter $125 million. That's what was given to us. Then we had useful life of existing assets. How many years? 10 years. So if you are observing, I am very careful with the units every time, right? So useful life of existing assets 10 years, useful life of new assets 20 years, right? Useful life of new assets 20 years. Okay, now with this, let's prepare a fixed asset schedule and a depreciation schedule. So you know the drill. Every time I say that, okay, now it's time to prepare a new schedule, you know the drill. You need to copy the template sheet and name it as fixed assets. So what we are doing is fixed assets schedule. So reach till this point, guys. This is my fixed asset schedule. The first computation that I will be making is the ending balance of fixed assets. Now, how do I arrive at the ending balance of fixed assets? You are all experts by now. We have done this in the basic case study, right? Beginning balance, add capex less depreciation. I am not taking the sales less sales as of now because no information is being provided to us there. Be very careful with the units. We'll be working with the millions only. Prepare this kind of a schedule, please. Prepare this kind of a schedule. Okay. Now, what will be the ending balance of fixed assets for 2017? Do we have this information somewhere? Yes, we do. We do have this information in the financial statements. Now, if we go in the balance sheet this time, net property, plant and equipment, this is your net fixed assets, right? Net property, plant and equipment, and the net balance, the ending balance is $437.1 million, right? $437.1 million. Now, what will be the opening balance for 2018? What will be the opening balance of 2018? Whatever is the closing balance for 2017, I hope this is very clear. Whatever is the closing balance of a particular year will become the opening balance of next year. Capex assumptions I have from my input sheet. Capex I have from the input sheet. And let's leave depreciation as of now, but let's fill in the formula. Okay, let's leave depreciation because we are yet to compute depreciation. So let me mark this yellow. We are yet to complete this depreciation, but let's just fill in the formula. Okay, beginning balance plus capex minus depreciation will give you this. So if you are showing depreciation as a positive figure, then the formula will have a minus here. But if you are showing depreciation as a negative number, right, because you think that okay, it is an outflow, so since I have to subtract it, let me show it as a negative number. So if you are showing this as a negative number, understand the formula will have the plus, everything in plus, right? So let's do this because we are showing everything in the financial statements also as a negative number. Or if you don't want to do that, you can simply do a plus capex minus depreciation, whatever you are comfortable with. Okay. Now let's compute depreciation. So depreciation will be computed in two parts. One for existing assets with a 10-year of a useful life. One for the new assets with a 20-year useful life. Okay. Now reach till this point. Okay, the next heading is existing assets. So first we'll compute the depreciation for existing assets. Now we know the balance for 2017. We know the balance for 2017. Let me bring it from the financial statements. 437.1. I am being told that my useful life of existing assets is 10 years. I am being told that the useful life of an existing asset for me is 10 years. So depreciation on existing assets. Depreciation on existing assets for $1,000,000 will be what? Now I need to do it for year on year. right? So what is the formula that I am going to apply? It is very simple. If the year in my end date is greater than 2017, if the year is greater than 2017, then I need to do what? 437.1 divided by 10 years. Column freeze both the values because I don't want this to change. Otherwise, I need a 0. Right? Otherwise, I need a 0. Okay? Now, why, some of you might be wondering, why have I divided it by 10? Because under straight line method of depreciation, whatever is the value, and I just divide it by the useful life of existing assets to get a year on year depreciation amount, right? That is what a straight line method of depreciation is. Okay, existing assets, we are done. Let's do it for new assets. Let me just bring in the capital expenditure from my input sheet, bringing in the capex. Also bringing in the useful life of new assets. Bringing in the useful life of new assets. Okay, reach till this point. I'll give you some seconds. Okay, now watch the video very carefully, because there is something interesting that I'm going to do here. Now, what I need is, okay, we have discussed this, that whatever assets are, the company, whatever assets the company places during the year, whatever assets are, installed, whatever assets the company purchases in that year, in a particular year, the depreciation for that, we generally take it on an average basis. That means we divide by 2. Right? So let's take an example that, okay, in 2018, if $150 million is my capex and 20 years is my useful life, so in 2018, what is going to be my depreciation expense? 150 divided by 20. That would have been the case if it would not have been placed in this year. But since it has been placed in this year itself, I am further going to divide it by 2. Either divide it by 2 or multiply it by 0.5. Right? So it would be 3.75. Next year, in 2019, what will be the depreciation for 2019 for this 150? Next year will be for the entire year. That means 150 divided by 20. Right? So, if it is being placed in the current year, if it is the first year where it is being placed, then half the depreciation. Otherwise, depreciation for the full year. Alright? So, we need to do this. Now, okay. Now I need dates here. Let's just follow along, okay? Just follow along. These dates, what I need is, I need these forecasted dates to come here. What I need is forecasted dates to come here. So what you need to do is just select how many rows you want. So 18, 19, 20, 21, 22, 5 rows. So 1, 2, 3, 4, 5. Okay. Type is equal to transpose, is equal to transpose, and select these dates at the top, is equal to transpose and select these dates at the top. Alright, now don't press enter, don't press enter yet. Okay, just hold on, do not press enter at this stage. Instead of enter, press shift control enter, press shift control and enter. You will get some numeric values, and you know now the shortcut to convert these numeric values to the date values. Shift control 3. So I'll just show again what have I done. What I need is, I need these dates in different columns to come in different rows instead. So this thing is known as a transpose thing. I am required to do a transpose here. Okay, I am required to do a transpose here. So whatever are the number of columns that I need, so 5. So I will select 5 rows, 1, 2, 3, 4, 5. I will type is equal to transpose, open the bracket, select these dates that I want, and instead of enter, instead of pressing enter here, press shift control and enter. You will get some numeric values. You know now to convert these numeric values to dates, shift control 3. So now what do you observe? That these dates which were there in my different columns are now in different rows, right? Can we do the same thing for capital expenditure as well? Can we do the same thing as capital expenditure as well? Try. 5 years equals transpose. This time instead of dates, I want capital expenditures. Don't press enter, press shift control and enter. So you get your capital expenditure also. And the units would be millions, of course. Now, let's do the computation. I hope you are with me till this point. Now, what I want is, so this $150 million is an expense for the year 2018. This $150 million is a capital expenditure for 2018. So what I need to do here is, so if the year is 2018, I need divided by 2, I need average value. Otherwise, I need a full value. Alright. So I will say if this date above, and row freeze this, please row freeze this. If this date above is equal to this capex date here, and column freeze this. So if the end date above is equal to this date, then give me what? Give me 150, column freeze again, 150 divided by 20 years. This will be a cell freeze. Why? Because I don't want this to change ever. This will be a cell freeze. This divided by 2. Otherwise, give me 150, column freeze, divided by 20. So what have I asked Excel to do? I just have instructed Excel to check if this date is equal to this date. If this date is equal to this date, give me what? Now you know it has to be an average number. Then give me 150 divided by 20 and divided by 2, because I need an average number. Otherwise, if it is not, if it is not same, let's say it becomes 2019, then in the next year I need to apply a full year of a depreciation, right? So then in that case 150 divided by 20 only. So I get a 3.75 here, and then I start getting 7.5. Okay. Now same formula for 2019. Now why am I not doing it for 2018? Because I've already done it for 2018. Right now I have to check for 2019. So of course this will be starting from 2019 column only. Same formula. So I can just copy the formula because I have done the freezings correct. So my formula absolutely is going to be very flexible. Fair enough. Then for 2020, same thing for 2020. Then for 2021, same thing for 2021, and for 2022 is also the same thing. Now that's it. Depreciation for new assets. You have computed the depreciation for new assets. Look how interesting that looks, isn't it? So you can just do a sum here. Okay. So that's how I compute depreciation for new assets. Okay. Reach till this point. I'll give you some seconds off. Done. I hope we are together. Now, can I compute the total depreciation? Can I compute the total depreciation? I have depreciation on existing assets. I have depreciation on new assets. I can simply take a sum. Just take a sum, please. Total depreciation in millions. Again take a sum. That's it. Now when you have this total depreciation, you are ready to link it to the fixed asset computation above. So simply link it from this computation. All right. And just remove this yellow here. And you are ready with the ending balance of property, plant and equipment, or the fixed assets. Now you absolutely know the drill. First, I don't need anything on this worksheet. So this is going to be an end of sheet here. And these depreciation values, I need to link it to the financial statements, right? Minus, and then link it to the depreciation number. Also, I have another thing ready to be linked, the ending balances of fixed assets. So I'll go to the balance sheet and link the ending balance of fixed assets here. All right. Now with this, I am absolutely ready with my EBIT numbers, earnings before interest and tax. Okay, just leave interest expense as of now. Please leave interest expense as of now and continue with the computation. You'll get EBT, earnings before tax or profit before tax. Then we have current tax and deferred tax. We have current tax and deferred tax. So what we are going to do is, we are stopping here for this video. Reach till this point. In the next video, we are going to cover taxation aspects, working capital aspects. We'll try and fill our financial statements to with as much information as we can, and then we'll try to compute an equity schedule also in the next video. All right, so let's stop here. I hope everything is clear. Whatever is being discussed here is absolutely clear. I look forward to welcoming you again in the next video, guys. All the very best.